everybody. Big Bad said that I can introduce tonight's MeBob review video. Right, Big Bad?
That's right, Doji. Just go ahead and get on with it, please.
Okay. Welcome, fellow traders and ne'er-do-wells.
Doji.
I'm sorry. What?
Ne'er-do-wells?
Well, aren't they welcome here, too?
Well, Doji, just get on with the intro.
Okay. So, fellow traders, welcome to the MeBob review for Thursday, March 6, 2025, where VidBad is going to review how price action behaved in and around the MeBob bar, and how a trader who was strictly trading the MeBob entry rules would have potentially approached the trades available to him or her today. So take a deep breath, let go of the day's worries, and allow yourself to drift into a state of peaceful calm as VidBad begins. VidBad, it's all yours.
Well, thank you, Doji, and I appreciate your contribution to the efforts we're making here. So, again, today is the MeBob review for Thursday, March 6th, 2025.
I already said that!
Oh, Doji, just calm down. Okay. So, before I get started on the review, I do want to mention that we now have a forexfactory.com thread. It's called the Price File Strategy. I have the link on this chart, and I will also post the link in the description to this video below. We sure would love your participation there at Forex Factory in the thread as we explore the potential value of incorporating the MeBob reference bar into our trading plan. And as always, you feel free to comment here in YouTube as well. But, the thread at Forex Factory would probably be in better place to contribute and to comment and to ask questions and to offer your own ideas, because that way they'll all be in one place as opposed to scattered through the comments of different videos. Again, you're encouraged to comment here. I will answer any and all comments that are placed here in the YouTube channel. But the main focus is just sort of attracting a group of traders who are interested in this particular concept and whether or not it would be of value to include it in a trading plan. So before we begin the review, since we're still new in this exploration, let's quickly review the original MeBob rules. So we're only trading the S&P 500 index for its derivatives, so any of the futures contracts, any of the ETFs, anything that is derived from the price action in the S&P 500 index. We're going to only use a 5-minute chart, and I would only use it on the regular trading hours, which of course begin at 9:30 a.m. New York time and run through actually 1600 p.m. New York time. So again, the stock market opens at 9:30. We're waiting for the 5-minute reference bar that opens at 10:05 a.m. New York time and closes at 10:10 a.m. That is the 8th 5-minute bar into the regular trading session. We're going to draw a horizontal line through the high of the reference bar and a horizontal line through the low of the reference bar. If the S&P 500 closes above the high of the reference bar, that's a buy signal. If the S&P 500 closes below the low of the reference bar, that is a sell short signal. The stop loss is placed either in the most recent swing or below the reference bar. It is a simple method. So, a couple of things here. If you watched the live trading video from earlier today, you're going to see that my actual executions are going to differ from what I'm going to explain here. And again, that is because here what I'm going to be doing is I'm going to be applying the original MeBob rules. So for example, on a day like today, any entry long, the stop loss will be below the low of the MeBob bar. Any entry short will be the stop loss and be above the high of the MeBob bar. As far as profit targets go, for a first trade long, I would be looking for 1 times the range of the MeBob bar. For the first trade short, I'd be looking for 1 times the range of the MeBob bar to the downside. If there are subsequent entries, long or short, I will then be using either the important pivotal points that might be nearby, such as we covered yesterday, and just a quick review we had for this line up here is the previous day's high. This line here, these blocks are previous week's low. This red line is the previous day's settlement and so on. So for additional profit targets, I would be using those, or if we get a subsequent, and you'll see what I'm talking about as I proceed here, if we get a long after an initial long, that's going to be because we had a pullback from a high, a session high. And so if we get a pullback from a session high, that session high is going to be our profit target. And I would not use the exact high. I would always recommend, and everyone has to decide this for him or herself, I would suggest subtracting somewhere between 6 and 6 and 8 ticks from that level, and then using that as your profit target if you're long, and I would add 6 to 8 ticks to that level and use that as your profit target if you're short. That may all sound confusing, but I think it'll be more clear now once we get into the actual review of today's price action. So here's our MeBob bar, and of course on my tablet, the way I have it set up, the MeBob bar is always going to have a vertical highlighted region. It's going to be highlighted in green. Once it closes, I'm going to place this green rectangle at the high and low. So you can draw 2 horizontal lines if you wish. I prefer to have this shaded rectangular region. So we're looking for a close below the low of the MeBob bar or close above the high of the MeBob bar in order to enter. So the first bar to close above the high of the MeBob bar was the bar that closed at 10:20 a.m. Eastern. The close was 57.99. Let us just assume for sake of this review that we were extremely lucky. I got filled at exactly that point. This bar closed. We hit a market where the sign that we're looking at our countdown indicator down here for obstacles is, there's 3, 2, 1, and as soon as it goes to 5:00, meaning there's 5 minutes left in the new bar, we hit a market where get filled at 99. So what's our profit? Our stop loss is going to be 1 tick below the low. So our stop loss would be 57.80.50. The range of this bar was, 16 points even, 96 3/4 high, 80 3/4 low. So that's 16 points even. We're going to add 16 points to our entry. Entry was at 99. So we are going to look for a profit target at 16. So you said 99, yeah. And sorry, 15. We're going to look for a 16-point profit target, and we entered at 99. So 99 plus 16 will be 58.15. 58.15 is right here. So that's actually the right below the close of this bar here. So you would have gotten long here. You would have had quite a pullback here. And but it did ultimately go to a profit target. You would have made 16 points on this first trade. One word about stop losses. I myself would probably never use a stop loss down here in real life. I would have probably put the stop loss at this below this low. Another thing I might do is put the stop loss a tick below, say like the 61.8%. Fibonacci retracement of the MeBob bar, and that's something we're going to look at tomorrow. I don't want to get into that tonight. Tonight I just want to focus on the trades that I believe would set up if you were strictly trading in the MeBob method. So your first trade would have been a profitable one if you had traded one range of, for a profit target equal to the range of the MeBob bar, so 16 points. Then had pretty strong pullback, two strong beta bars, closing at near the lows, attempting to retrace through the MeBob bar zone, our MeBob reference zone. This bar closed, this bar opened, made a lower level, and went this is a little red bear bar looking angry and ready to drop all the way through, but buyer stepped in, and he got our second close above. So this close was at 58,650. Again, for the sake of argument, we're going to say filled at 650. I don't even believe that would have been possible. Because if you look here, the open of this bar was 675. Meaning the second you hit the market order, that 675 was probably the bid. You'd have had to probably pay up to 7 to get filled. See, the high in this bar is 7. For say of argument, we'll say we were somehow lucky enough to have gotten filled at 650, but I think your best fill would have been right around 7 even. So 650, and what are we looking for? Are we looking for another 16-point profit? No, I wouldn't recommend that. I'm not saying it wouldn't happen. I would take a look at this high. Let's draw ourselves a line through that high. That high is at 20. Okay, 620. I would subtract 6 to 8 ticks. So let's just say we're going to subtract 8 ticks. So that gives us a profit target of 58.18. We're in at 58.650, getting out at 18. So we're making about 11.5 points profit, I believe, if my math is correct. And that would have been a profitable trade. You got another bear pullback. Again, attempted to penetrate. The zone, I would not have counted this as a close that I would buy. The difference is if it closed here, but it's a bear. I would wait for either a old bar close above the range, or in this case it was a doji. So for example, so if this bar came down, touched the high of the MeBob range, this bar closed here, this one opened, and then that was a big red bar. Again, it looked like it was streaming south, right? It's going to head through the MeBob zone, and the end of the world is nigh. But again, buyers stepped in. They forced it to close up here. I wouldn't buy this close if I were a pure MeBob method trader. Let's assume you bought the close. You did fill at 58.05. And again, I would have been looking. What was the high? Right here was 21.25. I'm going to probably go back to the original high, subtract my 2 points, and say, okay, I'm going to get in at 5 even, get out at 18. That's subtracting 8 ticks from this high. The original high of the session gives me a 13-point profit. So if I'm counting for it, it would have 16-point profit and 11-point profit. Let's just say it's 11-point profit. 11 point, 16, 11, and what did I just say here? 13. Pretty good morning. We got another bear bar. This one did penetrate and close. This is the first bar that closes below the high of the MeBob bar. Since the MeBob bar's first breakout, one of these bars closed. This one where it didn't see the MeBob bar high was 96 and 3/4, and this one closed at 96 and 3/4. This closed right at the high. So this is the first bar that closed below the high of the MeBob bar. But we have nothing to do now to raise rather another bar to close above the end fall again, where we're waiting for a bar to close below. And that's exactly what happened. We finally got a bar closed below the low of the MeBob bar, and it also closed below the low of the session open. So this is our first short. It closed at 71.50. We're going to assume we got filled at 71.50. They may not have. You hit your marking order and you get filled wherever you get filled. And you're hoping that it's as favorable as it can be. But the most important thing is not to miss the trade. You have to be prepared using this method that when this bar closes, you don't think about it. You don't mess around with limit orders. You get a marking and you get in doing a MeBob method. First trade short, we're going to look for a profit equal to the range of the MeBob bar. That's 16 points. And stop loss is going to be above the high. Again, for the sake of this exercise. On myself, I look at this here as a reversal attempt. I would have probably put a stop loss above here. You're still ahead 20 points, my goodness. But I would even probably consider my stop putting. If I saw it at the market here because of this close, I'd probably not risk much any more than above here. That's still more than 10 points. But you're looking for 16-point profit. 71.50. So we need to get down to, goodness gracious, 50. What would that be? 55? 50 would be 16 points, right? So 55, 50. We did it. We would have gotten there. 55.50. I probably also would have consulted this here. This is the low, session low, 53.25. You add 2 points, that gives you 55.25. So anywhere 55.25 or to 16 points. That would have been your profit there. Very good day for a MeBob method if you are a straight up MeBob method trader. The hardest for him today would have been if you got along here. You would have had to suffer through this pullback, and this was not a small pullback. You know, the price ranges on the ES are pretty large right now. I mean, it's 16.5 minute. I mean, you go back to the summer, and I think you maybe even define some early December or in the fall. There were whole days during the New Year session where the ES didn't move much more. It's 15 points. So these are, understand, this is an extraordinary amount of volatility that we're experiencing right now. This is bear market volatility. I suspect that we are in a bear market, that the highs are in for some time, and we're going to pull back for a little while here before we start a new bull market. But that's just my opinion, and you know, it's worth the paper it's written on, and it's not made on any good. So anyhow, a good day for a straight up MeBob bar trader. There were no other MeBob opportunities throughout the day. Buyers starting to try to take some additional positions at the previous day's low, yesterday's low, but the sellers overwhelmed them, and the rest of the day was more or less a trading range day. You see here, just really just turned into a trading range. And that's pretty well it. Is there anything else that I would like to cover for today? So I did add an indicator to this template, not to trade with necessarily, but to do some additional data collection and analysis specifically related to risk reward, and that's using an 8-period ATR, Y and peak period. They're close to the MeBob bars, the 8th bar of the day. I don't know if there's any value to this, but I did want to mention it now. So if I do bring it up later, it doesn't sound like I arbitrarily pulled it out of a hat somewhere. I'm just looking at it to see whether or not there's any way to develop some sort of systematic risk-reward profile using ATR. And again, I'm just sketching it because I don't want to explain on anyone later on. But for now, I would think that a first trade, look for a trade with a profit target is equal to the range of the MeBob range. And if you get additional opportunities, for example, when you had here, where you had a pullback, rally, pullback, rally. Down here, you had the initial short, it would have made your MeBob range profit, but if it pulled back, I would have been looking for, I would have been using these pivotal levels as my profit target. So if this had pulled back, say, to the MeBob area, and then you got another close below, and that close was down here, say it was this bar, 64 and a quarter, I'm not looking for anything more than the initial, than probably 55 and a quarter. So I'm not looking for large profits on the second or third or fourth bite. I'm looking for a run. I'm very, I don't call it a move, it's not, because the nudging move will be where you take your profit at a measured yield of the bar. I'm not suggesting that at all. I'm suggesting you add the range of the bar to your entry level and use that as your initial profit target. I also would suggest probably trailing a stop underneath these 5-minute bars. So for example, once you've entered here and your stop loss is here and this bar closes, I'd put my stop loss here. Yes, you would have been stopped out for a loss. Then in which case what would have happened is you would have taken the trade here. You would have entered at 550 and would have looked for would have looked, I guess, for that 16-point profit target. But this is really the second bite of the apple. This is where I need to do some work. We all need to do some work. Put our heads together. Again, you can put your comments here in the YouTube on the video. I will respond to any comment that's left here. At the same time, I would encourage you, I'm going to put this link in the description in the video below, and encourage you to go to Forest Factory if you're not already a member. Go ahead and join if you're interested in day trading and making money online as a trader. I think it's a great trading forum, and I believe this could become a really great trading thread. There's already some bright minds participating in this new thread. It's less than a day old, and I think we can all learn from each other, help one another by sharing our ideas, sharing our experiences, and helping one another trying to reach our goals as traders. And that's pretty much it. So I thank you all for hanging with me this long, and I will be back tomorrow with another live trading video. And I'll record my actual trades that I take, and each night, at least for the first few weeks, I'm hoping to regularly do a MeBob review such as this, where I specifically look at how a trader who's trading strictly the original MeBob method would fare. Again, the one difference is that the original MeBob method was meant to be a trend following method. So for example, if you had sold short here, maybe someone could stay short all the way down here and, I don't know, stop out when price starts coming back up. That's not me. I have a real hard time holding that long. I'd prefer to take my profits at previous levels, as I explained yesterday. It's a more reliable way of taking profits, in my opinion. I don't like giving a lot back, and I have a hard time sitting through if you're down here and you're up almost 30 points from your entry, and then here rallies to less than 8 points from your entry, I'd have a hard time. I'll be honest, I have a hard time holding through something like that. I would prefer to say, okay, I'm getting short here. Where is price likely to go before buyers would step in and test the market again. And it's likely to test the session low or the previous day's low. And sometimes buyers like to step in just before it gets to that price. So that's why I like to, for a short, I would add 6 to 8 ticks to that level and take my profit. Only for longs, I would subtract 6 to 8 ticks from a level such as this high and take my profit early. There's going to be times where you could have made even more, as you can see here, and made slightly higher high, but there's going to be just as many times, if not more, where you're going to be happy that you took that early profit. And that's it. I'm going to finish the video right now. I would have Doji say goodbye, but Doji has left the room. But I will be back tomorrow. Doji will probably be back with me in the morning. And again, I appreciate you listening to me and hearing me out. And I hope to see you at Forex Factory, where we can all take this journey together. Thank you. Bye-bye.